One of the most famous billionaires, Andrew Carnegie, famously said that 90% of millionaires got their wealth by investing in real estate. So I wanted to know two things. Is it still real? And whether investing in real estate is still a good idea considering the state of world economy? If you want to know this as well, then keep watching this video until the end. So I did some research for you, and in this video you will discover key benefits of real estate investing that will change your financial future. And hey, if you're getting any value out of this video, then let's help the YouTube algorithm by smashing the like button below. Cheers! Hey, what's up? Gerhard here with Business Vision, bringing you the best tips and tools for building a business with online video. And on this channel, I do a lot of business-related videos as well as other useful content just like this one. So if you're new here, consider subscribing. And now let's dive right in. Real estate is real, and it's always a great idea to put your money in real assets. But investing in real estate is only a good idea if you're in it for the long haul and not a quick return. If you are more into easy money, then you should probably check out my last video on 8 passive income streams right here. What I need to point out straight away is that real estate is the area of investment you can have much more control over the outcome. Just think about it. If you invest in stocks, bonds, or even mutual funds, you don't have much control over what will happen later on. If you have extra cash you want to invest in today's shaky economy, then you have to pick an investment that has a good chance of increasing in value over time. That's why we'll go over the main reasons why you should consider investing in real estate. The fact is, there are so many perks associated with real estate that you can quickly increase your net worth when you learn the art of investing in good properties. So let's do it together. And yes, before we jump into the video, if I miss out on any great points, then feel free to share your own property investing tips in the comment section below. Even though wise investors don't bet on appreciation, they still benefit from it. They purchase properties on a healthy judgment that the property will generate more income than it costs to own. For these people who have positive cash flow, it doesn't matter what the market does. For example, if prices drop, they are safe. If prices go up, they will have even more options to generate passive income. That said, appreciation or the rising of home prices is how the majority of wealth is built in real estate. This is a so-called home run you hear when people make a large windfall of money. While prices can fluctuate over the long run, real estate values have always gone up. Always. And there's no reason to think that it's going to change. And you know why? The answer is very simple. It's the law of supply and demand. Real estate, especially residential property, is a commodity that is in critical shortage and for which there's high demand because you will always need a roof over your head. So as you can see, it's a necessity rather than a luxury. Increasing the property value is obviously going to be a variable thing as it heavily depends on the area where your rental property stands. In some areas, the value of your property may rise significantly over the course of a few years, while in others, it may remain flat. Ideally, this value growth holds pace with inflation at minimum. If you happen to be in an above average area, you might find that you can beat the inflation rate. For this reason, residential real estate investing is still one of the financial cornerstones for middle class to reap rewards with minimum investment required upfront. But bear in mind, effective market timing, which means buy low and sell high, is another crucial component of successful real estate investing. I know it might be difficult to realize when the market has reached the bottom of the real estate cycle, but when you start noticing an upward trend, then taking action at this stage might translate into huge and strong financial returns later on. Now, you might be wondering how you can identify the phase of real estate cycle. Okay, real estate market is not an exact science like physics or maths, which means there are quite a few indicators you could use to determine the market condition. You know, the things like seller motivation, supply and demand, interest rates, employment trends, and even population growth. All these factors can have a significant impact on market timing. I just love passive income because it's the money you make without even working. Examples of passive income include cash flow from rental properties, stock dividends, royalties, or other investments that you're not spending your time on. As you might have noticed, I mentioned cash flow from rental properties, so I'm going to expand on this a bit. Of course I will, because the whole focus of this video is to speak about real estate investing. Okay, sure. A lot of people will argue that there is no such thing as passive income, but to me, passive income is an investment or a business that will take some front-end work to set up, but once it's running, there's little to no work needed to keep the money flowing in. I'm not going to deny that there is work that goes into finding the right investment opportunity, reviewing the qualified investment, or getting that investment to perform as intended, but the effort is definitely worth it. I think you want me to show you a clear example of how you can benefit from buy-to-let properties. Okay, let's do this with a simplified case study. Take the purchase price of $690,000. Most likely, you will not purchase it in cash, which means you will consider financing. In this case, you will need a down payment of at least 10% and imagine you have sufficient savings so you will be ready to put in $69,000. Then you will set up a mortgage for 20 years with a 3% interest rate, and this will create a monthly liability of over $3,000. Let's say you purchase this property in a nice area with high demand and low supply of such properties, so you could charge around $4,000 a month. One of the best parts of real estate investing is the fact that you're not only cash flowing, but you're also slowly paying down your mortgage with each payment made to the bank. So when you take out the loan to buy a real estate, you typically pay it back with the money received from your tenants. As you can see, a fundamental benefit of real estate investing is its potential to generate income, especially over the long term when your mortgage is paid down. Now, check this out. By doing this, you will create yourself a monthly cash flow of around $500. Of course, you will need to set aside some cash for potential repairs, but that's still a decent amount of cash that will add up to over $6,000 a year. According to the UK National Stat, the annual median home price in London has appreciated by roughly 2.8%. That's around 28.2% in 10 years, and almost double that in 20 years. Your cash will be strengthened over time as you pay down your mortgage, and wealth will be created in addition to that cash flow. As you might have understood from the title of this section, forced appreciation refers to the increase in the value of real estate due to investors' actions. Now, once this was made clear, I can give you more details on this. Houses have more value than just a paper, unlike stocks or bonds. They're physical, tangible assets. So when the market goes down, you might lose value on the paper, but it doesn't eliminate the physical asset itself. It can still be used to create that cash flow in the meantime. Having a tangible asset allows you to never lose the full value of your home like you can with our type of investment. Hey, are you getting any value so far? If the answer is a solid yes, then give this video a thumbs up right now. I can wait a few seconds. One of the most unique and attractive advantages of real estate is that it is improvable. Because real estate is a tangible asset made of wood, brick, concrete, and glass, you can improve value of any property with some elbow grease and sweat equity. Whether the repairs are structural or cosmetic, you can do it yourself or hire someone. The principle is still the same. You can make your real estate worth more by improving it. Another option to reach forced appreciation is to raise monthly rent. It seems like an obvious answer, right? But many real estate investors forget to update the asked price. When you're considering of raising the monthly rent of your investment property, be sure that the newly updated price is still reasonable. Before you do this, analyze the prices of your competitor properties in your area and do not go way above the average. In case you set up your monthly rent too high, the property you selected might stay vacant for long periods of time. Also, as I mentioned in my previous videos, you could rent out your property on Airbnb. It is known that short-term rentals charge higher prices per night and hence result in higher rental income. Leasing your property on the Airbnb market might be a great strategy for your real estate investing business. You can always expand on this platform by listing more properties. But as always, before doing so, make sure that your investment property is suitable for Airbnb rentals. Additionally, you might want to investigate the area by asking the following questions. Is it attractive for Airbnb tenants? As well as, what is the demand for Airbnb in this specific area? But make sure you have conducted the proper market research before renting out your real estate investment property as an Airbnb rental. Well done if you made it so far, because now we get to the last point of my research and analysis. Real estate can be the most challenging investment, and for that reason, it's sometimes overlooked by investors, even though it's a useful portfolio diversification tool. Real estate offers a slow but predictable rate of return over the long run, and can be a great way to build long-term wealth. Mostly, real estate assets are important because they have a very low correlation to stocks and bonds. This correlation is especially important in the periods of high inflation when real estate investing can bring you the biggest gains. Historically, real estate assets will offer you significant diversification of your portfolio, primarily because of this low correlation with traditional assets. With that in mind, you need to consider your investment portfolio and the asset allocation, and you can do this by asking yourself the following questions. What are the long-term goals and what are the short-term objectives? And how much income do you want your investment portfolio to create for you? Since I'm very curious about your journey, guys, do let me know what you invest in the comment section below. Investing is always a risk, so keep that in mind. You may make money on your investments, but you could also lose money as well. Things change, and the area you thought will increase in its value may actually not go up at all, and vice versa, of course. At the end of the day, guys, no matter how you decide to invest, real estate should be a part of your investment portfolio, since it is a good counter-cyclical investment that creates positive risk-adjusted returns to your portfolio. Many people understand that real estate can create wealth, but not everyone understands why. I hope this video shined a little light on the reasons why investing in real estate can help you grow your wealth so effectively. I mean, since the dawn of human civilization, landlords have been building wealth by owning and renting out residential properties, and today is no different. When you add up all the points mentioned in this video, then the question, is real estate a good investment, seems like a no-brainer. Of course it is. There are no other investments that offer the same rate of return with such low initial costs. As you become more comfortable with being a landlord and managing a rental property, you might want to consider buying a larger property with more income potential. Once you own several properties, it becomes a lot easier to purchase and manage all of them, and as a result, you'll be earning a lot more income. Did this video give you some valuable insights on real estate investing? If so, smash that like button and share it with friends. I would really appreciate it. So thanks for checking out this video. Subscribe and ring the bell if you're new here. Until next time, this channel is all about bringing you the best tips and tools for building a business with online video. Keep crushing it, and we'll talk soon.